Hey, all right, guys, we are getting ready for 70 TE trade, and we're going to get started here in just a minute. We got a good group of people here. So where are you guys from? Are you guys from the States, outside the States? LA? Cool. Anyone else? Anybody outside the US? Louisiana, Virginia, cool. South Africa, wow. San Diego, Florida. Hey, I'm from Florida. Canada, UK, Thailand. Wow, Thailand. That's great. Iceland. Man, I was in I was in the Navy and I went to Iceland years and years and years and years ago. Beautiful country though. Excellent. Okay, so let's get started here with how to make profits with 70 TE SPX credit spreads. And I'm going to give you some new information that I have and and some trades that I've done in the past, but are very, very, very similar to what we do today, and actually doing much better with the kind of strategies that we're putting together to make sure that we're profitable on every single trade. Okay, all right. So let's get going here. So so today, what can you expect? We're going to show you how to make consistent returns monthly based on margin capital at risk using SPX 70 TE high probability trades. Okay, and we want to do this without any big large losses, okay? And that's really the goal here, okay? Because over time, if your strategy's working, your trade plan's working, then there's going to be times you have losses, but overall you want to see your gains month over month over month, and that's really the gain, the the way that we need to trade basically on a day-to-day basis, okay? All right, so what are you going to learn? How to select the right strike prices, number one. Number two is detailed, we're talking about detailed entry, exit, and stop loss criteria to maintain consistency. How to prevent large losses by managing threatened trades. How to know when to trade, very, very important. The best time to widen spreads to gain an edge on a position. And how to trade consistently profitable, okay? All right, so those are the 6 guidelines that we're going to be talking about today, and we're going to hit on every single one of those, okay? All right, so I want you to stay with me until the end. I have a special bonus, and you don't want to miss that one, all right? So stick with us, and we're gonna give you some great content here, okay? That you can go back and actually use even today, all right? Okay, so I'm going to be looking at 3 different possibilities of why the heck you guys are here, all right? Number one, you're interested in learning new strategies that you'll take your trading performance to the next level, and you can finally leave that 9-to-5 career behind, okay? And that's not easy, not easy at all, but it's doable, all right? Okay, you've heard about, read about others making money trading. You know you can do it too, but you're just not seeing your account grow fast enough based on your goals. And number 3, you tried different trading strategies that you thought, okay, this is it, only to discover that it's just not getting you to the place that you really want to go to, all right? All right, so show of hands here. 1, 2, or 3. Interested in learning new strategies? 2, desire to see your account grow month after month? And 3, find the right strategy that provides the consistent trading results. So where are we here? Number 3, Paul, great. Keith, 2, 1, Chris, all. 1, 2, 3, yep, perfect. Okay. Any more? All right, all right, good. So I guess we're in the same group here, all right? Perfect. Okay, all right, so I'm a regular guy, just love to trade. I had a tech career, for a long time, and I said, no, this is it. I want to do what I want to do, and this is where I'm at. So Here's my family, wife on the left-hand side, kids in the middle, and parents on the right-hand side. And that was an MBA program a long, long, long time ago. So, all right, so that's me and some of what I am. And now we're going to talk about what's really, really important, okay? And so having a trade mindset is very, very important. And so let's talk about this, all right? So imagine what it would feel like if most of your trades were winners month after month, and it would be confirmed by watching the size of your account grow at the same time, okay? Also, becoming the trader that no longer takes large losses but consistently trades according to a proven trade plan that is profitable over time, allowing you to grow your account month over month. So bringing that in, okay, and taking that into heart is very, very important as a trader, okay? You don't want to be negative. You don't want to be, you don't want to, you don't want to try to, kill the world, right, on one trade. You want to be consistent, and that's where the goal is. All right. Okay. So before we get into the meat, the meat and potatoes, let's talk about what the heck an SPX credit spread is. All right. So what is that? A credit spread has the combination of two puts or two calls, where the put and call that is sold is more expensive than the put or call that is bought. You can also do these, right, at the same time, and that would be an iron condor, okay? This particular example is a vertical. It's called a vertical. So, and what we're doing here is we're selling, okay, first before you buy. So we're selling the 40-50 and we're buying the 40-40, okay? And so that is a bull credit spread, right? So you're selling the 40-50 put and buying the 40-40 put, and that gives you a credit when you put on that trade. So the trade is put on, and when you put on that trade, it's the highest amount of premium that you'll get on that frame, and so on that trade. And so what happens is after that trade is put on, what you want it to do is decay, and so that you buy it back, and that way that's how you get your profit. Okay, pretty simple. The trade is considered to be a high probability trade, and the reason for that is because you don't have to be exactly right and kill it right on each trade. As long as you're in a range, you're going to make money. Okay. On the other hand, it's important to understand that this risk reward scenario is not great, okay, for trading, and so you have to be very careful in managing these trades, and that's really the goal of trading credit spreads. Okay, so let's talk about SPX options rate of decay, and this is really one of the most powerful things on this in trading credit spreads, okay, because over time, when you put on a position, it will continue to decay and decay and decay until it just goes away. All right, and that's how options work. All right, so from 68 days to 33 days, the rate of decay is 34%. From 33 days to 5 days, the rate of decay is 57%. And from 5 days to expiration, the rate of decay is 100%. Right, so you see there as you know, this scenario goes down, basically goes through the process of a couple months, it generally moves in that direction. Okay, obviously if the market is going in one direction or the other direction, then yeah, you'll have to adjust trades, move them, and this has happened. You know, this happens when we have a very, very strong bull market. Okay. On the other hand, most of the time we have a market that's going steady, sideways to up, right? And sometimes, obviously, it goes down. Okay. All right. Okay. So probability factor. So we talked about already one probability factor, which is decay. Okay. The other side is implied volatility. So the ideal setup when you're putting on a trade is that you want to put on the trade when the market is has higher volatility and and when you after you put on that trade, the market volatility declines, and that's the scenario. That's the perfect scenario actually, and it doesn't happen most of the time. It happens quite a bit of the time, but that's how you want to position it. Okay. All right. So the other probability factor is theta, which is what we just talked about, right? Where the rate of decline in the value of the option is due to the passage of time. Okay, and we just talked about that, right? Okay, so the final probability factor is market direction. So market direction is basically the trending from the position that'll cause the premium to drop. Okay, so if you have a bull spread and the market is generally going up, right, then you're going to catch that profit earlier. Okay, if it's going against you, again, as long as it stays within the range of the market that you have, then you'll come out ahead as well. All right. Okay, so let's move through real quickly the risk management guidelines and daily routines, right, that I go through. Right, first of all, I always trade with a plan, right? And you got to trade with a plan so that you have a sense of where you're going with the market, okay? And then if it's not working for you, you need to tweak it, okay? And manage it so that eventually you come back with a trade plan, all right? So we have several trade plans for a lot of different trades that we trade, and we're tweaking those constantly. All right, trade no more than 20% credit margin of trading capital at risk. Okay, and that way, what happens is if you keep cash in your account, you'll be able to adjust trades, widen trades, and that'll allow you to keep profitable. Okay, very, very important. You don't want to you don't want to allow more than a 2% loss in your trading capital. And so, as an example, okay, when I look at, like, let's say 0 DTE, let's say, so when the market does a 3x cap, basically a 3x stop loss, right? That allows you to move on, and take your loss and move on. And so in a $30,000 account, you can do that basically trading on a daily basis, where you can take a loss like 3 or 4 times in a month, and you'll still be in that 2% loss scenario. Okay, so very important. Oh, and by the way, I'm going to let you know why I basically answer all the questions that you guys have for everything. Okay, so go ahead and put them in the chat, and then we'll make sure that we answer every single one of your questions. All right, guys? Okay. All right, for highly trending markets, position trades to follow the trend, right? So as I mentioned before, if you have a bull spread and the market's moving higher, that's a perfect scenario for taking a profit. Okay, and then this is important too, all right? Size your trades to ensure that emotions are not part of the decision-making process. You don't want to go in there and try to kill it. You want to go in there and trade in a way that you're not going to get stressed and take a huge loss. That's not what you want to do. You want to practice your trading consistently. Okay, so if you're new to it, you definitely want to trade small and trade often, and that way you get an understanding of how this trade works, and eventually you'll grow out of that and start increasing your amount over and over again. Okay, so really that's the goal. All right, pre-market routine. I review areas of support and resistance, where the market's going, what's it doing, very important. I review the U.S. dollar because that impacts the SPX along with Treasury notes, right? And we, over the past year or a couple of years now, we've been fighting with those treasury notes over time. But as long as you as long as you're trading those are great actually. ES futures, you know, is good to understand, because what happens is the SPX stops, right? And so you always are getting gaps in the when the market opens at 9:30 and closes at 4 o'clock. With futures are always trading, and so you can really understand the trend when you're looking at ES futures. Okay, the VIX is important as well, because that gives you volatility, not an implied volatility, but volatility over a month's time. Okay. And right now, these days are low volatility days. Okay, determine if credit spreads and positions, and save those. Right. So when I go into a trade, I want to be ready and understand, you know, when the market, you know, before the market opens, what I'm going to do, what I'm going to place, and that gives you a quick understanding of getting in early. And so even with you know 7 DTE, I like to put on 7 DTE trades and know when I'm going to do it, because implied volatility at 9:30 is the highest most of the time. And so that's the perfect time to actually put on an SPX 7 DTE trade, because the volatility is higher during that period of time. And it works very well for 0 DTE as well. Okay. Okay, again, the risk reward, we talked about this. I talked about this a little bit, all right? So you can see here that if you put on a 10 wide or 10 contracts, right, you're going to collect $650, but the risk is actually $10,000. So keep that in mind when you're trading. So, you know, what's important is you don't want to trade too big, so you don't have large losses. And I'll pound that into your head over and over again. All right, so let's talk about. I'm going to give you a scenario that I put together a little over a year ago, but it's very exact in the way that we trade today. Okay, so nothing has changed with that trade plan. All right, so. We started here at 9/15/2023 and ended at 10/10/2023. Okay, so during that time we had 18 SPX trading days. The market went down 282 points at 6.6% down. All right. Now I've been in markets where they go down even further, and you're trading. Credit spreads. It's not pleasant, but you can do it. Okay, and it works. Okay. All right, so let's go through it. Okay, so these are trades that I put on, and I'm going to share with you also trades that I put on today, and how I adjusted those trades. So again, stick with me here, right? Because I'm going to show you exactly what I did today, this morning, to adjust the trade. All right. So this trade here. So we put on 2 SPX contracts and put on a put spread, and we put on a call spread. And so that position gave us a premium of $1.40, right? Okay. Now the market went down, you can see there, and what we did basically was to close out this position. So I closed out this position, right? And so we had this, we still had this position. Let me see here. No, actually we put on a new position because we closed this one, and we collected 70 cents. Okay. So now we have $1.30 because we collected 10 cents off of there, right? That was a debit. Right. Now we go into this trade, and so we had to roll the trade, and we went from 4,400 to 43.90, and then we went, we rolled that trade for 43.85, 43.75. So I didn't widen the trade. I actually, put on that trade without widening it. Okay. Then I put on a new trade now, and this was a call spread, and I collected 75 cents. So now we have these two trades, okay, and one was rolled, right? So now we have a premium of $1.65. Okay, so now the market went down. You can see we closed that position at 10 cents. We rolled the other position, the put position, and we collected 35 cents. So now we have a new trade here for 43.60, 43.45. You can see here now we have a widened spread. Okay, so then we collected 65 cents. So now our premium is $1.90. So now we rolled the trade again, and we rolled it for a debit of 5 cents. Very small. And then I put on a new trade and collected $1.10. And then we rolled that trade. Okay, so you can see it widened. So now it's 20 wide, and we collected 60 cents on this. And so now we have a premium of $2.95. If you're not following this, right, it's okay. I understand, but go back and listen to it again, and you'll understand. Okay, you'll start to get it. But this is how these trades work when you're adjusting them. Okay. Okay. All right. So now we closed 625 for a limit of 15 cents. And you can see here that's the trade that we widened, okay? And then we put on, this is a separate trade now. And so we put on a basically we rolled this trade again, okay? And we collected 60 cents. And now we have a premium of $2.08. Okay, now we rolled the trade. We collected $1.10. Okay, actually this is a roll trade. Yeah, this is a roll trade. And so now we have 20 wide again. And so we collected $1.10 here. And then here we put on, we rolled that trade and for 60 cents, and then we rolled for $1.60. Okay. So now we have $3.90 collected already. So these are trades that have been threatened. Okay, and you can see here sometimes the market moves up, moves sideways, and that's when you're able to adjust those trades to make them profitable. Okay. Okay. So now we have we closed the trade for 25 cents, and this was a roll again, and we collected a debit of 15 cents. Okay, so with that we have a little bit less premium now because we had to adjust those trades, and that happens. Okay. All right, so now we have a trade that we closed at 20 cents, 631, and then we rolled this trade for 40 cents. Okay, and you can see here we have a widened spread here. So this trade here, got rolled 5 times, and here we collected 95 cents and $1. So now we have $3.07. 70 cents. Okay. So in this trade here, we closed the trade for 30 cents. And now we we roll this trade and collected a debit. So paid for a debit for 25 cents. Okay. So you can see now that we went down in the premium. Okay. But overall, we're rolling these trades and keeping profitable. Okay. Sometimes we have to manage the debit, you know, so that so that we get the right space for these trades. Okay. And so remember, the goal here is to be profitable and not take large losses. Okay. So here again, we rolled a trade 6 times here. We had a debit of 5 cents. However, 5 cents. Okay, and then we actually rolled that trade, and we collected 65 cents here. Okay. Now we're at a premium of 3.1. So you see here that the premium actually went down because we were adjusting those trades to get our head above water. Okay. Okay. So on October 10th, trade 615 expired worthless. Okay, and we ended on October 10th with $3.1 on these trades. Okay, depending on how many contracts you had, that's how much you would get. Okay. Okay. So again, I'm gonna answer all your questions, and I'm seeing them. Okay, which is good. Okay, and so we'll talk about that. All right. So let me share with you. This is not our year-to-date performance. Actually, we're working on the performance numbers right now, but this is what we did basically last year. Okay. Right now I moved from TOS to Tasty Trade, and we're having some challenges getting the performance in here, right? But we're working on it. But I can tell you that the performance is very close to what we do today. Okay, just wanted to share that with you. All right. Okay. All right. So so let's move on here, and I wanted to share with you what we do to get this kind of performance. Okay. So we have a trade alert service, and we actually bring people in every 3 months. Okay. And right now we're closed, but we're going to be open in, let me see here. We're going to be open August 6th. Okay. So the question is, would you like to follow our trades while you learn using our short-term strategies that we use? And it's not just 7 DTE. We do 7 DTE, 0 DTE, monthlies. We do all kinds of different trades that we have. We have 4 different traders that work with us, and they all have their own ways of doing it. I trade 0 DTE, 7 DTE, monthlies, options on futures, and we have other guys that do the same. Okay, so the question is, of course, okay, this is a place where you can actually learn while you earn. All right. And again, we talked about being interested in new strategies, desire to see your account grow, and finding that strategy that provides the consistent trading results that you're asking for. Okay, and this is it, guys. This works. Okay, so how do we break those barriers? Okay, how in the heck do we break those barriers? Well, are you going to keep doing what you're doing, or are you going to finally take the steps that'll take you to a place that it's going to really work? All right. And of course, this is not a rich, quick scheme. Okay. You have to have a no quit attitude, a commitment, discipline, and having that edge. All right. Now we have multiple edges because we have different traders. And I've been doing this for over 5 years now. Right. And it's a successful formula. Okay, it just works, right? And so with our trade alert service, we have automated signals. Okay, and again, this is part of the performance. We have automated signals, and they're coming in. I'm going to share with you a real live post, right, that we did today. Okay, and I'm going to show you that. Okay, so and again, you know, this is where it really works in an environment where you have several traders working together, you know, collaborating together. So you're not just one person trading in a room. Okay, so we have two-way communications on this, where we ask, you know, where the traders ask questions and we answer your questions, and then we have our actual alerts. Okay, the alerts come in automatically, most of them, and they show up in the post in Telegram. All right. Okay. So we have great trader success stories. All right. And you can see these. Okay. And I also have a guarantee. If you subscribe for 1 month and lose money by following my trades, I will refund your subscription by $125. Okay, 25% more. And so right now, as I mentioned, we're closed, but we're going to open on the 6th of August. And I want to let you know too that these prices here, okay, these are discounted prices. Okay, after August 6th, we are going to be increasing our costs or our prices by $20. Okay, so today, if you join the wait list, and let me put that up here. Okay, if you join the wait list, you will get $20 off. Yeah, $20 off for life. Okay, and so this pricing is going to go away eventually. Okay, and by August 6th, and you'll be able to get these prices here. Okay, and so what we have is we have a swing trader, day trader, and full-time trader. Okay, and so with the $39 per month, you get monthly expiration alerts, plus you get subscriber trades. Okay, subscriber trades are you know, guys that have come into our service and they trade for a living. Okay, and they share their trades for free, you know, once you're in. Okay, and so you get way much more trading than what you would think of. All right, for what we have. So in the 79 plan, we have the monthly subscriber trade alerts, 0DTE, 7DTE, and premium trades. And within the premium trades, we do buy rights, and our portfolio is over, I think in a year, over 42%. Okay, on those premium trades, we do a lot of buy rights there. And Ike is one of our traders that have put a lot of this stuff together for the premium trades, and it's really doing a great job. For the 109 plan, you get the monthly expiration, 0DTE, 7DTE, the premium trades, live trade rooms every day, futures alerts, and that's it. And that's what we have there. Okay, so there's a lot of good trading in there, and I always encourage folks that come in to do one thing at a time, you know, and learn it, and then move on to the next. Okay, all right. So let me go down and get to your questions here. All right. So let me go up here so I can answer all your questions. Okay, why 10 points spread? All right. So I actually studied 5 wide, 10 wide, 15 wide, 20 wide, and 25 wide. spreads. And what I came out to be is that those trades have, as you go up in the points, in the widening, it diminishes. Okay, it's a diminishing return on that trade. So I came back to 10 points because it really works. Really works daily. Okay, when we trade. So right now I'm in a 0 DTE trade, and let me see here, and we're profitable already. Yeah, we're profitable already for the day. So that, again, this works. Okay, so let me share with you two here. Let me see, what's the next? Let me share with you I'm going to share with you a trade that I did today. Hold on here. Okay, so now you see this was the opening for today. Okay, and you can see here there are threatened trades in here that we're working through. And obviously the trades that are not there, they've profited. They profited. Okay, and so what I did here was we're closing trade 843 and opening and rolling a trade 842. Okay, and so you can see here that these are the top areas here. So I closed the 295 trade here. Okay, and you can see I closed it for 70 cents. So we had a profit basically between this iron condor, right? So I rolled a trade, and in this case, I didn't have to widen the trade, okay? I moved the trade from 43.10, 43.30 to 43.50, 43.70. So I rolled it up basically 20 points, okay? And then this was a debit of $2.60. However, I put on a put spread, and I financed it for $3.25. Okay, so basically, this trade is still very, very profitable right now, and so the market went up, and so you can see here that it's very close to 53.50. However, if the market goes up again, right, we'll have a good advantage of being able to close out this trade by moving it higher. Okay, and that's basically how we adjust these trades, right? So let's go back. All right. So now, is this for you? Do you want to learn a step-by-step process to gain income in a market that goes up and down? Do you want to finally break the series of losses? Do you want to earn consistent income? And the answer is, of course, right? Of course. So this is what you get, guys, all right? You'll have $20 off for life and gain access to the wait list, that we have, all right? And that wait list is free. You can join, and if you don't want to join, on August 6th, you can walk away, okay? And nobody's gonna charge you for anything, right? But if you get on that train, you're gonna make money on it, okay? And I've never had to go back on my guarantee, right? that you make money on that first month. We have a professional group of traders, 4 of us, that trade on a daily basis. We all trade for a living. We have training and education channel filled with great content. We have automated signals, right? Partially automated. Most of them are part of those are other trades that we do that are not automated. Okay, we have trade entry fill price target after fill, my guarantee, and also we help you adjust trades too. Okay, so that's really, really important. With credit spreads, you have to adjust trades That's really the core of making money in that trade. Yes, it's a little complicated, but once you get the hang of it, you really get the hang of it, okay? And then you make money, and that's how it works, okay? So it's a winning strategy, guys. All right, all right. So helps how? Okay, helps how? As far as the 10-point spread, it just works. It works because you have the diminishing return on the other ones, and 10 wide just has just worked over and over and over again for a long time that I've been doing this. Do you do debit spreads? We do have debit spreads. Yep, we have a group. Ike does debit spreads as well, and he puts those out weekly. Cash versus margin. Isn't it better to have an account? Okay, so to do spreads, you have to have a margin account. You can't do a cash account with spreads. Okay. Yes, I could. Yes, I can show you. I mean, I can show you how to place trades in a paper account. So if you use a toss account, you can definitely follow those trades and put them on. Okay. So are you using? Okay, with no, I like to use hourly. I use hourly, hourly 5-minute and 1-minute charts is what I use. What deltas are you using? The deltas I use are 12 delta to 12 to 14 delta, and for call spreads, I use 7 to 9 delta on the call spreads. So a little bit different, just because the market is goes less higher than the put spreads. Yes, we will send you a replay for this video. Let me look here real quick. When you put on a trade, for the call spread, it goes from lower number to higher number, and on put spreads, it goes from higher number to lower number. Okay. Every time widen the spread, the buying power is reduced. Yes, you have to be very, very careful with managing the the buying power, because if you do it every single time, then you can get in trouble. There's no question about it. And so, like today, what I mentioned was I was able to move that position 20 points higher, and put on a put spread by financing it. I put on a put spread. Okay, and that allowed me to be profitable. Basically, I it was a profitable trade. But sometimes, I'd be very, very careful with trading, widening spreads all the time. You don't want to do that. Okay, especially in a market that's going higher. What is the criteria for rolling trades? Typically, I roll trades 40 points before before we get into a threatened trade. But a lot of times, especially when you're rolling a trade and rolled it several times, it's difficult to do that. And so what you want to do, you go from that 40 spread to basically managing a trade that you just make sure you have the width on both sides to manage it. And once a trade is going, once a trade has moved higher, you want to bring the put down quite a bit, or else you're going to be fighting the put spread as well. But it's a lot easier to manage a put spread than it is a call spread any day of the week. Trade number means the number of trades that we put on, and we just identify those from with the group where we share those trades, and they know what they're what we're talking about. So keep rolling until profitable in a volatile market. Yep, that works. Do you ever lever trade expire? Yep. Yeah, I have let I've let bear spreads expire before when they're just relentless and we can't get out of them. Year-to-date performance is based on a $30,000 to $35,000 account size. Yes, replays will be sent based on rolling. Yeah, I can't, Paris, I can't explain everything right now, but we widen spreads when it's advantageous to do that, and again, being careful of not going too far. Yes, we can. We are using cut and paste from TOS basically to trade. And those are the signals that you just saw today, basically. Yes, I take a 3x loss when the market is going higher and higher. But there are times too where you can get close and you can roll those trades. You can roll those trades and still come out ahead on those. But if you have a screaming market, especially screaming market that's going up, I've taken 3x losses on those. With the put spreads, I don't. With the put spread, I roll them. I roll them all the time. Are these people employed full time? Are they retired? Ike is a full time trader and he's on salary. The other folks are not. They're here. Those guys are here for free, and they share all their trades. And the reason Ike is employed with us is because he manages our stock service as well, and he puts on tons of trades on the on his trades. He actually manages his family business as well. So for many years. Is the service okay? I'm a current member. It is worth it. Okay. Thanks, TJ. Appreciate it. Thanks for the heads up. I love it. Thank you. There's so much spread spillage. How do you ever get your price? You just have to pick and choose. I mean, if you don't get the price, you go higher until you get in, basically. Tacey does not have copy and paste. That's correct. How do you tell the 7DTE trades that are new? Good question. Yeah, we need to point those out better, Dave, and because some of those are rolled, but I do try to say, okay, this is a new trade that we put on. So actually, for accounts that are 25,000 and below, are running a pattern day trader. Above 25,000, you're okay. Yeah. Okay, Peter, you got it. Yeah, and again, even if you're under 25,000, you can manage those trades. And just by not trading, more than 3 times in a 5-day period. Yeah, the easiest Lane, the easiest trading is the monthly trade and the buy rights. Those are very, very systematic. And the buy rights are, they're phenomenal. I mean, they're making tons of money. We don't offer a trial, and the reason for that is because a lot of people just come in and never they just kick the tires and move on. So we want traders that come in here that are serious about trading, and we work with them. Do you have to pay fee every month? It's a subscription. So yeah, it's a subscription fee. We just initiated a trade, a basically subscription for life. We just put that out there. It's actually for 7DTE for the middle plan. It's $3,800 for that. How do you access the training and education channel? Yeah, you'll get an email with that, and it's not by phone. It's just by another app that we have. Spec Alert is not what we use anymore. It's we use that, and that's part of the those part of the premium trades basically. Trades can be placed in the afternoon. Absolutely. I trade options on futures every day, pretty much every day, and I put those on at 2 o'clock every day, and those are great. Actually, yeah, we're going to be profitable today. What about overnight? Overnight, I trade options on futures because you can kill a trade overnight and not, it's not an SPX trade. Basically, an options on futures trade. We do have stock options. It's a different service, but it's we really revamped that service, and we're going to have a special on it for $29 a month. Okay, so it's coming soon. Will you have 0DTE webinar again? Absolutely. So I have to look at the schedule, but we do have 0DTE trades, and it's in my channel as well. So just look for Al Asada and you'll see my my YouTube channel. Delta put on credit spread is 12 to 14 for Delta 12 to 14 for put spreads, and 8 to 10 on on call spreads. Do you have to pay for the waiting list? Absolutely not. You can join for free. Why the switch to Tasty? Because it was something that I had to do for personal reasons. Best time to trade to enter 7DTE is at 9:30 in the morning is the best time to trade. Okay, I think that covers it. Hopefully, if you guys have any other questions, just email me at al@simpleoptionstrategies.com and I will answer all of your questions. All right, guys, thanks and have an awesome day.